Good evening, everyone. Thank you for coming to training tonight. Tonight we'll be going over day 11 of the 2-week syllabus, which is the pivot strategies. Now, I know some people were having problems locating where the pivot strategies are. So I'm going to show you. Can you guys see my screen?
Yes.
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 Okay, so the pivot strategies is located once you log in. You're going to go to client and then go to trade strategies. It's not located in your trade academy. The pivot strategies is located in trade strategies. When you click on trade strategies, you'll see pivot strategies over to the left. And here's your videos.
Andrea, thank you for getting back to me. I would have never found that.
Oh, no problem, no problem. I had quite a few people had reached out to me, couldn't find it. So it was with everything else, but when they did the split and put, the different levels in, they moved it. And I wasn't aware of that. I would have brought it to you guys' attention last night.
So for the next class, you should put it on the syllabus where to find it.
I've already done that.
Yeah.
Yes. So I will put an updated one in the group after we get done with this class. Okay.
Excellent.
All right. So let's see the pivot strategy video. The first video I just want to go to this section right here. Okay. So here, the first video, he's basically just telling us what these 10 pivot videos are. So it's going to be a recap of everything that we learned with the exception of the exits. We hadn't talked about that yet. We kind of briefly went over trade plans. We'll get some strategy tips in there, but I really want everybody to write this down right here. The recommendations. 2 recommendations. The first one, trade no more than 3 pairs for that day. And you want to have a diversified trade portfolio. Okay, and what that means is you don't want to just be trading one pair because, if the pair is not moving or if it's news for that particular pair and that's the only pair that you're trading, that kind of cuts you out of trading for the day. So that's why you want a diversified trade portfolio. So that way, if it is news, let's say you're trading in the morning and it's USD news. If that's not the only thing that you trade and you used to trading some Aussie in the morning because that overlaps with that session, you would be able to have an option to trade more because you wouldn't just have to stay away from the USD dollar. Does that make sense?
Yes.
Okay, and you're going to see anywhere from like 3 to 5 trade setups per day per pair. Okay, so he basically...
Can you say that again? I'm sorry, Andrea. Could you repeat that again?
You will see 3 to 5 trades per day per pair.
Okay, thank you.
Setups.
Now, Andrea, when you said don't trade no one 3 pairs for that day, is it allowed to grab different pairs a day, or you keep those same pairs, or like what's the advice?
So considering that you're new to this, I highly recommend, and we're going to be going over this tomorrow, that you pick 2 to 3 pairs. Choose at least one major pair, and at least 1 to 2 major pairs and 1 to 2 minors. If you choose 2 majors, only choose 1 minor. And just so that gives you some options, in the market in case it is news, or if it's no volatility in the market for that particular pair for that day, it's not really moving. It doesn't cut you out of a trading day because that's the only thing that you're used to trading.
Okay.
Okay.
Andrew, I have a question. Now,
Yeah.
at our level, and I hear a lot of people talking about the metals and indices. Do we need to steer away from that for right now?
Yes. Do not trade the indices. Right now, they are very, very volatile. If you have traded in a demo session, you see how long it takes for your trade to hit TP. It is complete opposite with the indices. You guys, I've taken some trades where I hit TP in less than a minute, less than 2 minutes. Like, it moves that fast. So
Oh,
if
yeah.
you don't know what you're doing, you can possibly blow your account. So I do not recommend anyone, messing around with the indices in their live account. If you want to set up now, you can have more than one demo account. So if you want to, you can set you up a demo account specifically for indices if you want to play around in it.
Yeah,
And I would
Andrea.
have it specific. I would only take the indice trades in that demo account and use the other one for my pairs. So that way you can, you'll really be able to tell what you're doing if you are struggling with the indices. It won't be messing up your account.
Yeah, especially if you're not used to your demo account. I made that mistake early on. I had a couple of good trades, and then I was interested in that NAS 100.
Oh
And so
yeah.
I went into the NAS 100, and I saw an entry point, entered it, and before the screen went away, I was down $706. I'll never forget it. $706. I went,
Yes.
what happened? And then it kept going the wrong way. So so obviously my entry point wasn't good. And so I'm like, well, maybe it'll go the other way. That's the wrong guy. So I got out of it, lost a lot of money, learned my lesson,
Yeah.
and discovered that the lot size was automatically entered by default. It somehow it was just the wrong lot size. I was not disciplined enough to look at my lot size before I entered the trade.
Okay.
It was a $5. It's a 5.0 lot size, and I'm like, oh my goodness. But the point here is, in 1 second, I lost $706, and it went south the wrong way after that.
Yeah.
So you gotta really listen to Andrea here, because I learned the hard way. Thank God it was a demo account.
Yeah. Yeah, and I'm telling you, anybody that never try trading that without doing it in demo first. You need to do it in demo so that you can see how it moves. It moves completely different from the pairs. Okay. So these videos basically is a recap of everything that we've already been through for the week. And so we're going to do a recap and make sure that everybody understands everything and can actually put it all together. Okay, so on video 2, number 2 for the pivots, see.
Right, because we're right here. Since we're currently below this level, this is a resistance. Okay, this resistance turned to support once we broke through and held on this side. So if we come up here to our resistance, we can expect to see reactions off this level, possibly return back to our support, back to our resistance. However, if this resistance breaks, it will then be support. Okay, so let's label this one here support now. It all really just depends on what side of the level price is on. So if we're above the level, it is support. If we are below the level, it is resistance. And to give you guys a conceptual understanding, price.
Does everyone understand support and resistance? Does everyone understand how this zone here is acting as support here
Yes.
Yes.
and resist? Okay.
Andre, I have a question.
Yes.
So forgive me, everyone, for being stupid, but
Now question
You're
is
not
stupid.
stupid.
I'm struggling a little bit, and I struggle a little bit with the resistance and support. So when you first look at a chart, I guess my question is, what do you look for to place your resistance and support line? I know we had talked about, and I tried to go back to some videos and I couldn't find it, but you know, you look at a chart, you look at maybe a 1 day or a 1 month chart, and you look at the, you know, the way it goes up and down. Where do you put it at? Like where? Like
So
you,
remember, we want to only, we're really concerned about where current price is.
right?
So
So
we're not
you,
going to be going like way back here. So we know that current price is here. You know, we're going to start looking for areas where price has came more than one time.
and you
That's
go
why
back
this
from
level
left to
here,
right.
you see this level here, like this level here, price came here, it came down, it came up, retested, came down again. So it's already hit it 2 times. It's automatically a resistance level. And then what happens when price gets up here? It rejects off of it again. Okay, now we've hit it 1, 2, 3, 4 times. Now when it comes down here to this support.
So are you looking for the higher highs and the lower lows?
I'm sorry, say that again.
So you're looking for the most recent higher highs and the most recent lower lows?
Yes, you're going to mark that too. When remember yesterday when we did the monthly, in all the videos when he did the monthly, he would mark the higher high and the higher low, or vice versa, depending on, you know, you want your most recent high and your most recent low. And then he would look for a common area where price would meet up at more than one time going across the board.
Okay, so you start from your recent high and recent low, and then you would draw it across to make sure it hits another point?
Yes, so look at it this way. Like instead of looking at the chart in front of the computer, let's act as if this is like a bowling alley lane and you're standing down here, right?
Mm-hmm.
So you want to roll your bowling ball down the path of where pins will fall on both sides.
Mm-hmm.
Which if you were standing down here looking this way, you wouldn't roll your ball down here, right here, would you? Wouldn't you roll it here?
Yeah.
Thank you, Andrea, for that. That gives me
I
a
was gonna say,
completely
that's
different way to look
good.
at. Yes, it was a
That's
great
like the
analogy.
that's like the hammer and the nail.
Yes,
Yeah.
that's
I mean, like
true
you
to
just
ground
gotta
right
look
there.
at it different. Like you can't, you sometimes with some people with the support and resistance, like when you just looking at it flat in front of you, some people just don't see it. But if you just imagine if you were looking at it from a different view, if you were looking at it from down here, you would want to roll your ball in the path of where you ball, the pins continuously met up, and you want to draw a pathway through it.
Okay.
That is good.
Little bit more clarification. Thank you.
Do you get it now? Like if you picture looking at this
Yes,
way,
my struggle was where do I start? So
can you see how this is the path that you would have rolled your ball right here?
right,
This is the path that you would have rolled your ball right here,
right.
because this is where price kept coming. Is support on one side and resistance on the other side. And how it changes is because whenever it crosses, okay, so it's resistance here. Whenever it's above your head, it's resistance. We can't jump any higher than the ceiling will allow us to. We're restricted from going any higher, right? And then, so once we hit the ceiling, we come back down to the floor, which is the support. Now we got some momentum. We jump, we're gonna bust through the ceiling, right? This was the ceiling. We're gonna bust through it. So now that we bust through the ceiling,
And now it becomes
if it don't become the floor, I'm gonna fall all the way back through this hole.
right.
The ceiling got to become the floor for me to land on, my landing pad. And then I got to get the retest, and I can launch off again.
Okay. Thank you. Thank you for the clarification.
Okay.
I have a quick question.
Uh-huh.
I've been trying to get in on your lives, and I heard you say yesterday. So what day is this? Because I don't want to miss out. So do you get to a certain point and start over, or?
Yes, we're going to be, this class here will actually end tomorrow. They'll be done with the 2-week syllabus, and then we'll start a new class on Monday.
So the new class for the 2-week syllabus, the next one starts Monday?
Uh-huh. Every 2 weeks we'll be starting a new class.
Okay, what time will it be starting over Monday? Because I definitely want to get in from the beginning.
Eastern Standard,
What time?
7 p.m.
Do you have
So
the
6
schedule in the
p.m.
Facebook? Are you
South
guys
Central
connected in the
Standard.
Facebook?
Yes, are you in the Operation Promised Land?
Yes, I am.
Okay. Yeah, the
Okay, yep,
schedule is
there's
right
a
there.
schedule in there. But it's going to be at 7 p.m. It's going to be on the same link, same password at 7 p.m. Eastern Standard Time, Monday through Friday.
Thank you.
Okay, and it's also replays inside of Operation Promised Land too.
Yeah, I saw that, but I didn't see day one, so that's why I didn't go to the replays.
Okay, it's a post in day one that tells you, it has 2 videos attached to it telling you how to set up your MT4 and your broker account.
Okay.
That's what you need for day one.
Okay.
Okay.
Mm-hmm.
All right. Okay, so now does that bring some clarity for everyone? If you just imagine standing down here and you're looking at it, and you can see where you will want to draw that path from looking at it at this angle.
Yes.
Yes, thank you.
Okay, so everybody, I pretty much think everybody understands support and resistance. We're going to watch him draw some support and resistance areas real quick.
Right here, okay, this is our resistance. And if we drag this across, we can see that it indeed does turn into support. So resistance has now turned into support. All right, now I can do this all the way up and follow these moves here. Price react.
Everybody see that, how this was resistance. It kept coming up, rejecting, rejecting, rejecting. Once it crossed over, now it was a support for it. But when you're looking at this market like this, you'll get used to, you're looking for the peaks. The peaks is what help you find it. Look for continuous areas of where the peaks come to. You see how we got 3 peaks right here? That's a triple top.
Reacts, showing a level of resistance. Take this over here, which then turns to support. So let me clone this. Very simple stuff, guys. Look, I can follow this all the way up. We have another resistance. Price finds resistance, breaks above that resistance, then turns to support yet again. I want you guys to pay attention to how price is moving between these zones, respecting them on either side. Support turns to resistance, resistance turns to support. It all works the same. When you're drawing your zones, you just want to make sure that you are including the reaction points and that the zone is respected from both sides. Price.
Does everyone understand that? That as long as price is being respected from both sides, that it's clear to say that that is a support or resistance zone. So does everyone understand support and resistance? If so, we can move on to video
Yes.
number 3.
Yes.
Anybody got any questions on support and resistance? You see how now looking at it that way, how you can tell where you would put your zones at?
Yeah, I get where it gets put at, but like he's taken a chart that's already happened and showing an example. I'm my thing was when you look at a fresh chart, do you start from all the way to your right and look at the most current, or do you go back further and further and see how you know?
Well, you're gonna always start looking at where price is at current. And you're gonna
Right.
look there and
That's
then
what was confusing me because we kept going, starting in the middle of something, and I finally realized that he's just using it as an example to show.
yeah, he's just using that as an example. Like when you would open up a chart, like wherever it's at, you would start at current price and you would start looking. And if you would know, you wouldn't have to, you would be able to see the zones. You won't have to go back, like, because you got to remember, like when you're on like the monthly, each one of those candles, it takes a month to print it. So you go back too far, you'll be like a couple of years, back on the charts. So you want to start looking at in the area where price is currently. He's just using the entire chart so that he can show you multiple times where it's at. And that's what he do for all of the examples. So it can be repetition to you. You can see it multiple times. Okay. Anybody got any other questions on support and resistance? Okay, moving right along to video number 3 on pivot. This video is going to be talking about trend lines. Okay, so I want to make sure that everybody understand what a trend line is. Who can tell me what a trend line is?
Diagonal support and resistance.
Yes, ma'am. Diagonal, support, and resistance. Okay.
As support, it broke, it then acted as resistance here, and then fell to the downside where we got our new trend. Now we can expect price to bounce from its new trend line after breaking out.
Okay, so what he did here, he drew, this was an example. You know, price is going up, it's making higher highs, higher lows. And so he draws the trend line. Remember, in order for it to be a trend line, it has to have at least 2 touches, 2 to 3 touches. In this case, we got 3, so we know it's valid. Now, once the trend line is broken, that's when you know that it's going the opposite direction. It will break, and then you'll get your retest. Okay, it'll come back up in this area, and then it'll continue to go to the downside. Now, that doesn't happen every single time, but I'm explaining that to you to see, so that you can see how they drew a trend line for it going to the downside. The trend line is at the top. The reason why it's on the top is because price is going down. We want to know when that's broken and when price is going to be headed to the upside if we're in the downtrend. So we'll know that this is reversed. It's time to get out. So it's drawn on top. We got 3 touches. It's a valid trend line. Everybody understand that?
Yep, I'm good.
Yes.
Yes.
Okay. All right. So now I want to make sure that everybody understand how to use this channel tool, how to grab it from your trading view and use it on your charts. Okay.
I prefer to do that. If you're going to draw the original trend line the same, okay? So you're going to start, take your channel tool, you're going to pull it across, line it up as you would your trend line, and you're just going to pull it to the other side, or then you're going to get a channel, and it's going to kind of just give you an idea of what parameters price is working with, okay?
So when you use the channel, you guys, you're going to draw it out as if you were drawing a trend line. So you're going to draw it out long ways first and then pull it to the side. Okay? That's how you get it to work. You want to go the length first and then open it up. And you're going to find that tool over in your trading view on the side over here in the tools.
What's the name of it again?
It is the channel. Hold on one second. Let me just look it up.
It's up there, yeah. Parallel channel near the bottom.
Parallel channel, that's what it is. Right here.
Awesome. Thank you.
Okay, so that's why you grab that. And so you spread the width of it and then just open it up. I want to make sure everybody know how to use that.
And Andrea, what is the significance of that channel?
It's so that it's kind of like the trend line to show you the direction that the market is in, what trend it's in, and you can see the break when it breaks and retests, or when it hits this acts as if support and resistance as well. So as it's going up, as you can see here, this here is the support. This is the resistance. It's just a diagonal support line, support and resistance line. And you just like make a channel showing you the highest area and the lowest area of it during that time. That's colored in.
And I
Does
do
that
have
make
one
sense to you?
I have another question. Yes, ma'am. Over on your tools, there is a ruler, and I've seen you pull from. What is that ruler?
The ruler is used, this ruler right here.
Yes,
This
ma'am.
is your pip counter. So let's say that, you know, you knew from price action and from, you know, what had happened in the market over here that this was about to be a buy, right? And so you get in on the buy here. So you use your long tool, because remember, for a buy we do the long tool. You use your long tool and set it up, and it'll tell you how many pips. But sometimes you might want to just you know, mark a move and see how many pips it is. So you grab this little ruler right here, and then you place it. And if you're going up, you move it up. It'll tell you how many pips when you stop. If you're going down, you go down, and it'll tell you how many pips.
All right. Thank you.
Uh-huh. All right, so everybody know how to use the channel, aware of what the purpose is for the channel.
Yes.
All right.
Good.
Okay, let's watch him do this.
15-minute. Right here, we have several points. We got points down here. We've got another point here and another point right here. And price is clearly in an uptrend. So we're going to take our trend line tool and we are going to draw our trend line across. And the way we want to do this is you want to be able to connect the furthest points here of the move. Very easy. Price is acting as support, bouncing through here. We'll label it for everyone. So right now, this trend line is acting as support. Okay, we got our interactions marked up here, and this trend line breaks, and you can see price doesn't get all the way back to the trend line. That's fine. That's not always going to happen. Okay, but on this side, if price is on this side of this trend line, it is acting as support. Okay, this support then breaks, and just like horizontal support and resistance zones, when the support breaks, right here is acting as resistance. Okay, now price doesn't come up and pinpoint touch it.
Is there anyone that does not understand where or how to determine where to put a trend line?
I was just about to ask, so do you always put it at the very tip of the wick?
Yes. Some people do bodies, but price action, you want to include the wick, and you want to have at least 2 to 3 touches. For anyone that doesn't understand like where you would put it, okay, so you know you hear you in a downtrend and you can see clearly you in the uptrend. So you want to start at the lowest low, and you're going to draw your line to where you're going to have 2 to 3 touches. It's okay if you only have 2. If you have 3, that's great.
Okay, thank you.
But you need to understand that this trend line has broken and will now be acting as resistance. When we do get an update here, look at this. Let's check this out really quick. We have a trend line that goes across here. Price breaks, holds out here. You can see the interaction.
Now, why did he draw this trend line here, and why did he start up here? Because this price had went up and it started to go in a downtrend, and this was the highest peak. on its way down. Okay. When you drawing the trend line from the bottom on the uptrend, when it's in the uptrend, remember the trend line got to go on the bottom of the candles because we want to know when price actually go below that. So on the uptrend, the trend line gonna start at the bottom and go to the top, and vice versa for when it's in a bearish trend. The trend line is gonna start up at the top and go to the bottom. You want to start at your highest peak, wherever your highest peak is. This could be the trend line. This here could be the trend line from here to here. It don't even have to include that. I think he's going to show you that. Hold on.
On the end of this trend line. If you do pull it in to fit this wick, beautiful pinpoint. Now, it doesn't always happen like that. Okay, you're not always going to see such a great reaction, but sometimes.
You see how he moved that trend line? He already had it drawn, right? But then once price actually, because he's doing this as an example, right? Let's just say we were doing this live. And so price was like back here. So once this candle was created right here and this wick happened, our trend line was coming this way, we would adjust it and move it up to include that wick because that's where price went. I remember, I think somebody asked about that the other day, about, you know, how you know when to move it. You'll know when to move it because you'll see a wick shot through it. And then you want to include that wick in your trend line. Okay.
Andrew, I have a quick question. Could he have lowered that trend line to that lowest low down there? Could he have done that?
You mean
like down and bring it down towards that, where that, I guess it's the doji down at the bottom? Yeah. And brought it across like that?
Well, the only reason why he would have did that would have been if price, if he was in the markets when price would have been like around this area. Okay. Other than that, it would be no reason to make it like that after all this happened, because we can clearly see that that's the break there if you did draw it. Does that make sense?
Yes, ma'am.
But it wouldn't, you wouldn't have to draw it like you were talking about down here.
Yes.
Yeah, no, because this wouldn't have happened yet. If we did draw it anything like that, we would have been drawing it like this, and this has nothing to do with that trend line. If we extended it out, I mean, you could extend it out, but no, it's on a 15-minute.
All right, thank you.
So it depends on your trend line is going to look different depending on where price is and what's already happened in the market when you get in there, like at that very moment. So you can get in the market right now, mark up a chart, mark up like EU or something, and somebody else can get in the market 20 minutes from now, and their trend line, you guys could have learned how to draw trend lines the same, but because price has happened, when that person draws a trend line, it's going to be different. So that's the same thing with like these examples. He's showing you examples and on charts that price has already happened. So he's just showing you random multiple examples. But if you were getting in a chart in a market and you know, wherever current price is, that's where you would start to look for everything. and then you would remember you always have to look to the left.
Price will give it to you. Now, there are trend lines. Within trend lines, you have to understand what direction the market is flowing overall. So, for instance, when we broke this trend line here, and you're sitting here thinking, okay, great, this trend line has broken. It's now going to act as resistance. If you want some extra confluence, you can draw a trend line through here. And you can see price breaks, holds, it acts as resistance, and it falls. Okay? Likewise, coming down this way, you can see the price respected this little trend line. You're going to see some tight trend lines like this sometimes. So I want to show them to you. The price breaks the trend line, retest, flies up to the next one, which at that point was this. But overall, it came back up to this support and resistance zone and then breaking this overarching trend line before heading back up. Okay, so this is just a quick example and brief explanation of trend lines. I'm not going to go into too much detail. If you're still struggling with trend lines, again, I'm going to reference you back to the trading platform as a whole and the trend line section within that. They're really well broken down in there if you need some extra help with.
Okay, so does everybody understand the trend line?
I'm good.
How to draw them and the purpose of them?
Yes, ma'am. Yes.
Yes.
Okay. I know you're going to be drawing those trend lines on your higher time frames, mostly like your 1 hour.
So what exactly did he mean by the confluence when he drew the extra 2 sets of lines? Yeah, right there.
Okay, so he's just showing you trend line. So like all of this didn't have anything to do with like a trade setup or anything. Like he's just showing you how you will draw these trend lines in this market for this particular pair at where price is at this moment.
So that doesn't necessarily have to do with the first 2 trend lines that he drew.
Meaning this trend line right here. So he drew this trend line right here just to show you an example of this is a trend line to the upside. A bullish trend line. Okay, so when price broke, it came through. This was almost a retest. Came down. It was going in. It started going bullish again. This was the retracement. It started going bullish again. So he drew this trend line just to show you that this is how you draw a bullish trend line. This is the break and the retest. Almost a retest to here. And then price come back down. And this is how you would draw the trend line for the downside.
So that would have been the bearish one.
This would have been the bearish one. And the price got to be on the upside. And the reason why is because price is going down. You want price to stay under the line. When price is going up, you want it to stay above the line. Write that down for your trend line. When price is going up, you want price to be above the line. That means you want it to act as a support for price going up. You see how this acting as support is landing on it. And then the reason why is if price is going up, the reason why the line need to be on the bottom is because if we're in a buy and we want to use this trend line to determine when to get out of this trade, if we had the trend line, let's say we put the trend line up here on the top, right? We drew it up here. And price just kept going up. Will we ever know when to get out of this trade?
No.
We would never know, would we? Because as long as price didn't continue to go up, it would never cross over that trend line. And it could just fall. We would never, I mean, you would know from looking at it, but I'm saying marking your chart. But do you understand why you wouldn't put it on the top?
Yes.
It goes on the bottom. So that way, when price decides to go down, when you see it break it, you know that it's changing. The trend is changing. Same thing here. You see how when it's going down, this is the bearish trend line. So the trend line is on top of the candles because we want to know when price turn around and go up, right? And we'll know because we'll get that break in the trend line. If it was under the bottom, price could continue to go down and then it could turn around and go up. We would never get a break in that trend line because it's on the bottom. So that's why it has to be on the top.
Okay. So you say when it's in bearish, it needs to be on the top, and when it's bullish, it needs to be on the bottom?
Yes.
Okay. Sounds good. Thank you, Andrea.
Uh-huh. Does that make sense to everybody? You understand why? Because of what we're using it for, it would give us, it wouldn't make no use to us if we had it above here. Not for letting us know when price turned around and reversed on it.
Okay, I'm just trying to make sure I get this right. I apologize. Can you just repeat that one more time about when price is going up?
Okay, so when it's a bullish trend, price is above the trend line. That means that all the candles gonna be above the trend line. The trend line is gonna be on the wicks at the bottom. And draw an example in your notebook. Draw some lines like this going up.
That's going to conclude this video.
Draw some lines going like this, going up like price is moving, and then just draw a line underneath the bottom at the point. And then for your bearish one, do the same thing. Draw price coming down. And draw your trend line at the peak on the top. Draw the break in the retest and price going the other way so you can actually be able to see and understand why it's like that. Same thing over here. Do the break and the retest. And then draw a little arrow with price going down. Then when you look at it, you'll visualize why it's like that. You know that it's there so that if price goes down, you will know when it turned around or when it's starting to go in the opposite trend.
Okay, thank you.
Okay, no problem. All right, you guys. So now we get ready to go over the pivot levels, which is video number 4. Okay. Let's see. I want everybody to take notes during this because they're going to actually tell you how to set this up. Okay, so if you didn't set it up when you watch the videos, you'll be able to set it up either during this or after this. It's real simple, okay? I'm going to stop it so everybody can write it down.
Welcome to the video training for pivot points. So in this video, we're going to be looking at pivot levels, what they are, how to use them, and how price moves in between them intraday. So first thing to understand about pivot levels is that they are a type of, you guessed it, support and resistance, right? That's kind of the key foundation for everything that we are doing intraday, is that we are playing in between support and resistance. Now, again, there are different types of support and resistance. There are horizontal support and resistance, diagonal support and resistance, and as you will soon learn, there are many different types of support and resistance. Now, pivot points are an indicator-based support and resistance, and I'm going to go ahead and pull them up here. So I'm going to go up here to indicators, and I'm going to type in right here in the search bar, pivot point, and then you guys are going to want to pick pivot points standard. Okay, you want the standard pivot points, and it's going to pull them up. And I already have mine with the settings that I normally use, but I'm going to go to format. So right click the pivot and click format. And here you're going to get to change a few different things about the pivots, right? So you can choose to show.
Okay, so did everybody get that? This right here, what he's showing you, this is basically support and horizontal support and resistance lines, but it's horizontal and support levels that the institutions use, like banks use to trade with. And in this video, we'll be able to see how price goes to those levels. Okay, but I want to make sure that everybody know how to have the right thing on, like have it set up on their trading view for these pivots. Okay, so when you're in your trading view and you're getting ready to put it on there, and you go up to your little F, I'm not sure why his looks like this. Here it says indicators, but it's going to be a little F up here. And when you go up there, you're going to put in pivot point standard. That's the one you're going to choose. Okay, so it's basically like a support and resistance indicator, basically. Okay, but pivot point standard is the one you want. So once you get it and get it on your trading view, you can click on any one of these lines that's going to be on the page. You're going to right click it, and then you go to format. You want to change the pivot time frame to the daily. And it's very important that you have the type as traditional. And you want to make sure that it shows show historical pivot. Now the number of pivots back, we got it set on daily, so you can put 7 here, 10, 7 will take you 7 days back worth of pivots. And so that's what you need to put in when you set it up. You can change the color. You can go to style and change the color of them if you want to. Okay, the P. I don't see one on here. But where you see the P, that's the pivotal central levels. Okay, and the R1s, R2s, R3s are all resistance levels. It'll be resistance 1, resistance 2, resistance 3, resistance 4.
Andre, can I interrupt a second?
Yes.
Could you go back just a second? When the number of pivot backs, so if it's daily, should it be 7 or?
Yes, you can put 7. You can put 7 for 7 days. I have mine set at 10. I think mine is set at 9 or 10.
Okay. Yeah, it's 20, so I don't, it's just.
Yeah, you don't have to have 20. It depends on how far back you want the pivots to show on your trading view.
Okay.
So you don't have to put 20. Some people do 7. You know, you can do 10. If you want to do 20, you can.
That's fine. I'll just take your recommendation.
Uh-huh. And so the S1 is going to be your support 1, support 2, support 3. Okay, so do everybody see on the chart how you can see the R1, 2, 3, 4, and then you got the support levels, and they're completely different. See how close these resistance levels are? And when you look at this, you know, price always respects these pivot levels, you guys. Look at how price came up here. It broke through, it came down, it broke through again, it rejected here, you know, came up, broke through, it still stayed below this zone. It kept getting rejected, it came up, it never broke, so it never, you know, went up, it didn't break it. It came right back down to this level, kind of played around in here until it crossed over. So these pivot levels will really be able to help you with your trading, because you will be able to trade from pivot to pivot.
So, Andrea, this is pretty much putting support and resistance on your sheet automatically?
Yes, I was wondering if anyone was going to catch it. It is, but it is,
So-
but it's
so you
not.
can draw your own support and resistance, then put this on to see how close you came to it?
Yes, you still need to mark your charts up.
That's what if you marked your chart up and you said, am I right? And you put this table on, it would
Yes, and then you're gonna
tell
put
you-
this on there.
Okay.
Yes, and then I'm gonna show you how it works here in just a second. So does everybody see that and understand that we got the S's is for the support zones and the R's is for the resistance? Because if you look at how when the price came down here, it didn't touch this level, but it was headed to that level, but this was acting as support. So what happened? Price went back up, but the resistance zones, when it hit those, it goes down because it's resistance. Remember, the resistance is above our head. The support is under our feet. Makes sense? Is it clicking for anybody?
It makes sense.
I got it.
Yep.
Yes.
Cool. All right, let's go.
Show historical pivots or not to show historical pivots. So if you only wanted to show the pivot points for the current day, then you can click this box and it will unshow all of the historical pivot points, which I have on my screen right now. Okay, and then you can also choose how many days back you want the pivots to show. So if you want to look at the previous week, you can just change this to 7, right? Now for the pivot time frame, this is going to be very important. So you don't want to do weekly or monthly or yearly or anything like that. You want to do daily, and make sure the default setting is going to be auto. Make sure that you change it to daily, and make sure that you double check every time that you're trading that it says daily, because we are intraday trading, okay? So these have to be daily. And then you can go over here to the style, and you can change the color of everything, make the lines thicker or whatever, and do whatever you want to do there, just for style essentially. And then of course make sure that the type is traditional. You don't want any other of these weird styles on here. You just want traditional daily pivot points. Okay. Now, what are pivot points? Well, pivot points are an indicator that is based on a formula. Okay, now there are many different pivot point indicators, and it's going to depend on what platform you're using, what broker you're using. That's going to depend on what formula they use to calculate their pivot points. Now, the interesting thing about pivot points is that institutions, okay, and as you guys may or may not know, institutions are the entities that generally move the market, right? So I'm talking banks, both private and public, right? Hedge funds, has a formula that is similar or close to the formulas that these major market players are using, then you will be able to trade with the big players and know where price is going and know where they're moving the market at all times intraday. Okay, so that is the power of these pivot points. Now, I want you to look at the pivot points generally as institutional support and resistance. Okay, so we have horizontal traditional support resistance, which is built into the market, which are inherent barriers in price. And then we have diagonal support and resistance, which is based on the fact that the market moves within channels. And then we have institutional support and resistance, which is based on the idea that intraday institutions are moving price between pivotal levels for their transactions, okay? The pivots are based on a calculation traditionally of the average daily range, so how much the market moved the day beforehand, how much the market is expected to move in the current day based on fundamental analysis such as news releases, as well as highs and lows, stuff like that, right? So there's a lot of different things that go into the calculation of where these pivot points are. Now, the cool thing about the pivot points is that they are not subjective, meaning that, you know, when you go and you are trading support and resistance and price channels and such, you're trading something that is subjective, meaning you have to build the skill to accurately mark, analyze, and trade those levels. But when it comes to pivots, all you have to do is put them on the chart and they're done for you. It takes out all the subjectivity. So it really helps to give you more of an objective bias in your trades to have these on here. And just to give you guys an idea of how this calculation is running each day, notice how on this day right here, right, so the beginning of this pivotal, which starts right here, is the beginning of the trading day, which is at 4 o'clock, okay, the start of the Australian and then soon Asian session, okay, and then comes all the way down to the end of the day, which is the end of the New York, start of the Australian session, right? So this is the day as it moves on, and then boom, a new day begins, and then this is the whole day here, and then another day, blah, 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 right? Continues on. So notice how this day, when we began at the beginning of the day, price moved all the way down as a very trendy day, a large movement in price, right? So the next day, the pivotals took this into account, and when the pivotals updated at 4 o'clock, notice how they were very far apart because there was so much volatility the day before. And then notice how this day, price stayed within a very small range, didn't really go anywhere. So then the next day, the pivotals were very close together, okay? So
Do everyone see the opportunity where they could have made money with using these pivots along this trade the whole time it was going down? Every time you got a break and a retest of a pivot. Right here. Break, retest, enter the trade for the sale. Take it all the way to the pivot. It didn't go to the pivot level here. You know, it eventually did. Let's see, if we had got in here, stop loss would have been above the most recent high, right? Stop loss wouldn't have got hit. You see how it came all the way down to the next level? Same thing here, break, retest, all the way to the next level. Break, retest to the next level. So many trade opportunities just right here. Did everybody see that?
Yes.
Yes, ma'am.
yeah,
Yes.
It's very important that you see that. That's in the downtrend, coming down, right? So every time we break the support and it becomes resistance, that's when we going in for the sale. Over here is the opposite. Over here with the resistance levels, when it starts to go into the buy, when it starts to go bullish and it starts to go up. You can't see that section of the screen, but it will be just the opposite. Okay. Every time you break a resistance level and retest, you want to get in for the buy.
Names. All right, so I'm going to zoom in here. Now, notice right here, let me get my circle here. We have our P, right? That is our pivotal level. So that is our central level, okay? That means price is going to open up somewhere between P and R1 or P and S1. It's going to open up somewhere in this range. And then P is considered our kind of pivot, right? Our center for the day. Now, R1 stands for resistance 1, R2 resistance 2, right, etc. And then S1 support 1, S2 support 2, etc. Right? So again, support and resistance. These are institutional support and resistance levels. Now, what I want to do in this video, okay, is A, make sure you guys understand what pivot points are and how to accurately apply them to the charts, which we've already gone over. And then B, convince you guys that institutions are really moving the market in between these levels intraday when they're carrying out their transactions. So that's going to be what we do for the remainder of this video. We're going to go look at some examples, and we're just going to go through and look at how the price is moving each day between these levels. So let me go ahead and remove all of my drawing tools here. And we're just going to start, bring this in here, going to start, let me just throw up a vertical line right here, okay? So let me just zoom in. Okay, so the day opens up right in this region, okay? Now, you guys know how support and resistance works, hopefully, by now. So notice how price opened up over here, came down, bounced up off of this pivot level, and then we had a big candle breakthrough. We came up for a retest, it held at resistance, and then price came down. Where did price come down to? Price came down to our next pivot level right here, S1. So it came down to support 1. Notice how price acted at support 1. It bounced up and then bounced up and then big candle to break through. It looked green candle as a retest. Retest it again. It's holding now as resistance. And then I can bring this across so you guys can see, boom, we held at resistance again right here at this magic pivotal level, right? And then boom, we saw that price came down to our next pivotal level, S2. All right, that's what we expected, right? These institutions, the guys who move the market, move the price, are moving price between pivotal levels intraday, right? So that's what we would expect. Now, price comes down. It bounces at support 2, at S2. Bounces up, comes down, bounces up again, breaks through. Big candle to break through. Look, green candle showing rejection here, retest. Holding at resistance, we're trying to come back, we can't break through it. We start to fall. Where do we fall to? We fall all the way to S3. That is what we would expect, right? And then zooming in, you guys can see, look, price broke through, big candle again, retest, holding, at this magical just pivot that's just sitting out here in the middle of nowhere, right? Obviously, there's more to it than that. And then boom, comes down. Guys, look, big candle broke through, green candle retest. Where do we go? Down here. Now, we didn't quite make it to S5 by the end of the day, but notice we will hit S5 before we continue on, right? So amazing how that worked that day. Now, next day, take a look at this day. Okay, this day worked a little bit different. We had our pivotal level up here, and we had our S1 down here. Now, the reason why price didn't make it to either one of these pivot levels is because clearly the market didn't have enough volatility to go anywhere. So this is a day when there's not much liquidity or volatility in the market, and therefore the institutions don't have enough power to push this to P or S1. You guys will get better at identifying how to trade situations like this and how to predict
Have no
Andrea, I think you're
sound.
muted.
Yeah,
You're
no
muted, Andrea.
sound.
I'm sorry, you guys. I paused the video to say, remember earlier how I was saying you want to have more than one pair that you're looking at? And this right here was an example why. You see how after this huge fall yesterday in the market, that the next day it wasn't a lot of volatility. So someone that's only trading UJ wouldn't have had any real trade opportunity, you know.
Looks more like consolidation.
Exactly. So if you do, yeah, I do want you guys to have one pair that you really, really, you know, studying and trying to learn, but have you at least 2 to 3. So that way, you know, when stuff like this come about, you have some options on trade.
I should say, when these situations are going to come. So on a day like this, when price flew down that much, you can expect when the pivotals are this far apart the next day that you might have an, and then flew down to S1, which we would expect, and then came down here to S2, and we didn't have enough volatility to quite make it down here to S3. But the reason why we didn't make it is because you guys see this giant green candle right here? This is a news event. So we will talk more about news events when we pull everything together. So there's a reason why the few times that it doesn't make it to these levels like we would expect, there's always a reason why. And we will get to that in later videos. But notice how after the news hit, all that volatility came flying up, flying up. Look what happened. Pinpoint. We came up to this pivot and then dropped. Okay? It's like magic. And then you guys can see how price just keeps bouncing, bouncing, bouncing.
So does everyone know how to get this, know what to set it up as, and know how to use it once they get it on their chart? It's going to be the last thing you put on your chart. Don't try to mark your chart up with it on there.
Yes, ma'am.
Okay. All right. So moving right along, we're almost done, guys. Video number 5. This is going to be really quick. We went over this earlier in the week.
In basic understanding, to understand this candlestick,
Right here, basic candlestick
when
price
you see
action.
this green candlestick,
Does everyone understand that this is a bullish candle?
Yes, ma'am.
Yes.
Yes.
Okay, so where does price open on a bullish candle?
Bottom. Bottom.
It opens at the bottom because price is going to be rising and it's going to go up. So it's going to open at the bottom and it's going to close at the top. The wick is where price was at one point. Let's say this is a 4-hour candle. It takes 4 hours to do this. So when price opened, it was here. When price closed, it was here during the 4 hours. But sometime during that 4 hours, price went as high as here and as low as here. Okay. Same thing on the bullish candle, which is the red candle here. Who can tell me where price opens and closes on a bullish candle?
Opens at the top.
Opens at the top,
Bottom.
closes on the bottom.
Closes at the bottom.
Close at the bottom. And what the wicks mean?
That's where price had gone and it couldn't sustain it.
Exactly. All right.
Okay.
Here. Bearish exhaustion candles. This is a bearish exhaustion candle. Both of these are, even though this one is green. Who can tell me why it's a bearish exhaustion candle even though it's green?
The next candle is bearish.
It closed going down So regardless of the color of it, because it has that long wick at the top and it closed at the bottom, that means it's going on a bearish trend.
Right, because
Low
price
price.
rose all the way up here and it could not sustain itself and dropped all the way back down. That's an indication that price is going down. So when you see this, I will wait to see what the next candle print, and you see in this example is going down. Same thing here. This is a bearish candle, but price came all the way up here, couldn't sustain itself, and went down. So all bearish exhaustion candles, the wick is on the top. Because remember, bearish means that price is going down. These wicks is pushing the price down. That's a good way to remember it. Okay. Anybody got any questions over a bearish exhaustion candle? Does everybody know what it means?
Yes.
Yes.
I'm good.
Okay. And you can use these exhaustion candles for entries and exits into the market. Right? Because if price is going up and you see this print, you know what? It's exhausted. It's about to turn around. So if you're in the buy, you'll be looking to get out. If you're, well, it depends on what the trend is. Does you want to trade with the trend? You don't want to counter trend trade. So depending on what the trend is, you know, if it's a bearish market, let's say that this was the retracement, right? This the retracement, and you get this candle, and you know that price is about to go back down. Okay, so all right, bullish exhaustion right here on the right hand side. Bullish exhaustion, it can be for a bullish candle or a bearish candle. You're going to see the long wick on the bottom. It means that price went down that far but did not sustain itself. So that means that price was 9 times out of 10 in going into a bullish, I'm sorry, if it's like here in this example is bearish, it's going down. Okay, but you get the exhaustion signal here, letting you know that, hey, it's done ran out of gas. It can't go down anymore. And then look what happens. Same thing here. Bearish coming down. Even though it's green, it's an exhaustion candle. It came all the way down, because if this was a solid bullish candle, it would have just went up. It wouldn't have had a wick to come way down here. These wicks are only created when price travels but can't stay. Look at it like this road trip on for the candle, and if you don't have enough money when you get to the destination, you can't stay. Got to go back home, got to go back up. Does that make sense to everybody?
Yes, it does.
Yes.
All right. So one more chart to look at.
Downside this time, it's really important to understand here, okay? And it's real simple.
Engulfing. A bullish engulfing is going to be a bullish candle where it's going to be way larger than the candle prior to it. Same thing with the bearish engulfing, except for it's a bearish candle. You see how we're headed to the downside, but then we have this super huge long candle. It's considered engulfing. And it's bullish engulfing. Whatever color the large candle is, that's what the trend is. If it's a huge green one, it's bullish. If it's a huge red one, it's bearish. And it's gonna, as long as it's bigger. Now this green candle, it can even be this tall. And it's still considered engulfing, right? Compared to this candle?
Yes.
Yes, it would still be considered engulfing. Because we learned the other day, remember the railroads, they're equivalent. It's going to have to be taller than the prior candle in order to be considered engulfing. It's got to overtake it, be taller than, or be longer than.
And Andrea, does that mean that the next candlestick is gonna be trending like the bullish upwards, or?
It can go either way. Now remember that remember like on this bullish candle, it closes at the top, right? So whatever the next candle is, it's gonna open way up here. It has to open here. Because remember, it's gonna open where this one closed at. Now it can either open and go up, or it could open and come down. I wouldn't be worried about anything unless if this was like some news or something. But if your next candle doesn't engulf this candle, then you're in the bullish. It's bullish. So like if you like, let's say that a candle opened right here beside this and it was a bearish candle and it came down and it came down to here. Now we know that was a quick reversal. I'm out of there. Because then that would have been considered an engulfing. Does that make sense?
Yes, ma'am.
Yes, it does.
And Andrea, would you normally wait until that next to even get in the trade? Would you even wait until the next candle would form?
Well,
or?
so remember, like right now, we just going over some of the confluences that you would see. Remember, you're gonna have other things to look at too, like your support and your resistance. Now, this right here, this could be at a resistance level. If this hit down at a resistance level, I'm sorry, a support level, and yes, I'm in there. When I see that this candle is closed and it's engulfing, yes, I'm in the trade. And remember, we buy from resistance. I'm sorry, from support, and we sell from resistance. So this is not the only thing that you're gonna be looking at. Remember that you're gonna use everything that you learned. Your trend line.
Okay. Thank you.
So you know your trend line. Let's say like right here. You know, if you did have a trend line, you would have seen the trend line break, right?
Yes.
So you still
Okay.
have to have, even with that indicator, you still would have to have, what, 2 or 3 confirmations?
Yes. So
Okay.
don't just, yes, you got to use everything that we've learned all week, out for the last 2 weeks. The support, the resist, everything. And we're about to go over it in the order in which you could do it to mark your charts up so that you'll actually be able to place a trade. We're about to do that right now. Okay, so everybody understand the bullish and bearish engulfing.
Yes.
All right. Now here's the exciting part. Right here. Everyone get out your pen and paper. This is what you're going to do tonight.
Uh-oh, we can't hear you.
Can you hear me?
I can now, yes.
Okay, this is what you guys are going to do tonight. So basically, this is what you need to do in order that we've learned. Okay, so right now we're getting ready to wrap this call up in about the next 5 minutes. Okay, the Asian markets are open. So you're going to have your regular homework tonight, which is going to be day 12. Okay, it's about maybe an hour and a half, an hour, 20 minutes worth of videos. Okay, going to finish up pivot strategy. Okay, so the Asian market's open right now. So I would like for everybody to pick them an Asian pair. And you're going to go to the market. And you're going to do this. You're going to use your strategy basics. You're going to go to the 1 hour time frame. And mark your major support and resistance. Now we're not even, this homework here is not even going to have you going, starting at the monthly and dropping down. We want you to go to the 1 hour time frame and mark your major support and resistance areas. Remember, look in the area where price is currently. You're going to mark your most recent high, your most recent low, and any areas where support and resistance was respected. Okay, so once you do that, you're going to drop down to the 15-minute time frame. This is where you're going to trap price using your trend line and your channel. Remember, your channel tool can be found over here. It's where your trend line tool is, I think. So you click there and it'll be at the bottom. So use trend lines and channels if needed to trap price on the 15-minute. Before you do all of this, I want you to go ahead and set up your pivot point standard indicator. By clicking on it, getting it on Trading View, you're going to make sure that you're going to click on Format. You're going to make sure you got it on Daily. The type is going to be traditional. Pivot points back can be 7, 10, 20. If you want it to look like his chart, I think he probably only had 20 on there. Just so that he could show you more examples. Okay, so after you get to the 15 and you trap price, you're going to turn your pivot indicator on. Okay, so now you're ready to start looking for an entry. Use your pivot point standard indicator to help you determine. You're going to use that and your support and resistance line, your trend line breaks, all of that. Use that to help you determine when to get in the trade on the 15 or the 5-minute. And I suggest the 15 for everyone, considering that everyone's new. Okay, let me and this right here, you can't see it right here. Hold on.
So number one, so strategy. All right, so once you've got your 2-minute time frame, and you're gonna
price action. You're gonna use price action to enter the trade. You're gonna look at the candles. You know, look at, is it where it's at on your pivot point standard indicator? Is it breaking, or do you got a break and a retest on a trend line or on a channel? Is it at support or resistance? Use all of that to determine when to get into the trade. If it's anyone that's never placed an actual trade before, you can really quick go to YouTube and just put in, you know, how to place a trade on MT4, and it'll just show you. You just go to the pair that you're wanting to. We're going to be doing a video or a session on that too. I just talked to Dominique about that last night. So that's going to be coming. We'll have that done like within the next couple of days. I think it's going to be, it might even be like a live session. Okay. To show you like how to take some of the signals, how to put the signals in. We're going to do that. That might be this weekend. So does anyone have any questions on what to do, to look for a trade setup and place a trade using everything that we have discussed for the past almost 2 weeks?
No, ma'am.
I guess it's time for the training wheels to come off, huh?
Exactly.
Yes. So if you let's say if you're having problems and you just cannot place a trade on your trade view, everybody know how to use that long and short tool, right? On trading view, you actually go to the can, you click whether you want to, if it's long it's a buy, or if it's a buy it's a long tool, if it's a sell it's a short tool. You click that, and then you would place your cursor where you would actually get into the trade, and then pull your, you know, TP to where you think it would go to, and pull your stop loss to where you think it would go to, and then just let it sit and watch it play out. And when you save that on, when you put that on there, it's going to save it on there. And I'm going to probably ask to see a couple of people's tomorrow. And I'll have you share your screen, and we can just see your trade set up. You know, if it didn't go the right way, that's fine. You know, don't be ashamed to show it tomorrow. We need to look at it so we can help determine why it didn't go the right way. Okay?
Yes, ma'am. Andrea, I wanted to tell you, I went in mine and placed the trade in my demo account last night. And I used everything we learned. And I did end up with, I think, almost $3 profit. And this morning it continued to go up. So definitely retaining the information.
Okay, that is
All
good.
I was
right.
like, oh my God, I'm so
Yeah.
excited.
Good.
There you go,
Nice.
girl.
Exciting. I'm so proud of you.
You're on your way.
Thank you. Yes, I felt like it. I wish I had put in for more, but I'm gonna follow the suggestions.
Yes,
Because I'm
follow.
at the
Yes,
0.01
yes,
lot size.
yes. Okay, and that's gonna happen, you know, for everyone. I think that we, you know, went through all the information thoroughly. I think that everybody understands it, and I believe that once you put everything together, you're gonna see that you have the basics to do this. And is it gonna be a continuing learning process? Yes, it is. You don't know half of what you need to know. This is just to get you started. Just to get you started, get you familiar with some of the terms, you know, so that way when you get on the sessions, you'll understand what people are saying. I know that our courses have been running past 8 p.m. what I want everybody to do next week, everyone that's been on these classes for the past 2 weeks, next week, make it your homework. Remember, you're going to create your own syllabus, right? So you create what time you're going to do your syllabus or what have you, but make it a habit to be in class with Derek Conway at 8 p.m. at least 3 times a week. You get to him from going straight into your back office. Now, when you watch him now, after going through all of this, it's going to make sense to you. Like so many people prior to now have gotten on his sessions and like have no clue as to what's going on. But after going through this, you're gonna know exactly what he's doing. So that's gonna be your homework after you finish this course. You know, at least 3 times a week, you want to get in there and watch him live mark them up. If for some reason your life does not allow you to do that, they are recorded. Make it your business to go in there and watch 3 recorded sessions a week. These things are going to help you. Okay? All right, so tomorrow's homework will be day 12, pivot strategy training 7 through 10. 7 through 10. Video number 7 is about almost an hour long. You know, I don't know if some of you guys want to maybe watch that one tonight and get it out the way, and then watch your other 3 tomorrow, which would be about maybe 35 minutes, 40 minutes worth of video. Just giving you a heads up. Okay, and everybody know how to get to the pivot strategy, right?
Yes, ma'am.
All right.
Yes.
Well, thank
Yes.
you guys for coming to class tonight. I'm so excited for you. I feel like people are actually getting it.
So can we officially call you Coach Andrea now?
Yeah, yes, you can. Yes, you
Hey,
can.
hey, Coach Andrea.
And we will meet back here tomorrow. Everybody come with at least one trade plan, you know, trade setup that you set up on TradingView tomorrow, and we'll look at a couple of them. Okay.
Okay. Thank you.
All right. No problem. Good night, guys.
Good
Good
night.
night,
Good
everybody.
Thank you.
Good night, everybody.
Good night.
Thank you, Coach.
No problem. You're welcome. I'll see you guys tomorrow.